Thank you so much. I hope my voice, my video, and the screen is clear.
Yes, that's it. Loud and clear.
Fantastic.
Yeah.
Fantastic.
Thank
So
you.
earlier, Gandhiji had said that, there were three monkeys, each one denoting something. On a lighter note, these work from home days, those three monkeys have translated into three concepts. One is checking whether your audio is working, second is video, and the third is the screen. So a very good evening, everybody. I hope wherever you are joining in from, whichever part of the globe, hope you and your family and your dear ones are healthy. And even if something has happened, touch wood, all good will happen, and hope that they recover very quickly. On that context, let me get started. And before I head on to it, thank you so much, Isaka Bangalore branch, Ganesh Ramani, Venki, and the entire office bearers for giving me this opportunity to share my thoughts. And now today's session, I'm going to focus on one of those things which we keep hearing about, but often we don't go into the depth of it. And that is something called as SOC. The word SOC, let me remind you, SOC has multiple dimensional aspects. If you ask a cyber security person, what is an SOC? Anybody? What would you be actually answering? You can put it in the chat window, not in the Q&A, please. If you are a cyber security person, the moment you say, I am operating out of a SOC center, so what would that SOC center be? I think most of you are getting it right. Security Operations Center. Now here, this is typically something which is doing real-time monitoring or close to real-time, because there is obviously some amount of delay. And you are literally going through the entire infrastructure, network, seeing the attack. And it is like those sci-fi movies where you have those fancy screens, correct? And you actually are monitoring. And it's a 24/7 job because your organization stakes are so very high. And you're trying to monitor, various things. Fantastic. But that is something 100% I'm not going to cover. Okay, that is completely different. In fact, that is a very small portion of what we're going to speak on. Now, what I'm going to speak on is a concept called system and organization controls for service organizations. Formerly, it was called as service organization controls. We'll come to those concepts in a quick span of time. Now, I'll also give you the context why this has become increasingly important. Okay. And more importantly, more critically, today we are relying heavily on the operations of a third party. That is something which is very, very critical. All of us are relying today continuously on operations of a third party. So therefore, my dear friends, this criticality element, let us see how this, sort of a framework has explored. And what is it as professionals we can do? Either we may be a management consultant, you may be a freelancer or an independent consultant, or you may also be a typical system auditor. What is it that you have to focus on? Okay, from that angle, let's quickly get started. So I think a quick introduction about me was given, so I'm not going too much into the depth of it, but here it is. First, the agenda for today's discussion is I'll first give a focus on what is SOC. The moment we are done with it, we'll move on to what are the types of SOC. That's a critical area. And then we speak about other related terms. So first 3 sections is where we get all our foundations clear. Once we have got that component clear, or we've got reasonable clarity, we will jump into the COSO framework, which is an interesting framework on internal controls and how that has got interrelated with a SOC. Okay. And how do I get started? Roles and opportunities. So this is typically how the agenda is stated. So first and foremost, what is SOC? SOC is systems and organizations control. And to go a little more deeper, let us take an illustrative approach, because all of us are too bored with just taking only, images and slides, etc. So I just thought I made up this illustration. Before that, all of us have heard of this 3-line of defense, and this is something which is spoken of across the channel. You may talk about any organization, any vendor, they'll speak about this. But there could be some people who are new to this, and definitely I will focus on it. And let me remind you, this entire SOC, we focus on the lot of auditing concepts coupled with technological elements and various things. And let me also remind you, I am addressing a very diverse audience. Some of them are already at the C-suite level, dealing with larger things. You may have a complete understanding of it. Probably, the value addition which you may pick up may come only in a specific slides. While some more are hearing it for the first time. Oh, I always thought SOC meant, that cybersecurity operations center, which is taking care. Oh, I didn't know there was another SOC. Some more people have heard of it, but didn't know much. So I have to deal with all these things. So please give me that benefit of doubt. With your permission, I will have some elements of basics and some more elements of the advanced portions as and when it comes. Now, any organization, there is always a possibility of a fraud or an error. In simple language, something which affects the objectives from being achieved. Simple language, objectives from. And that in a plain language, we call it as risk. Something untoward, something prohibiting is happening. Now, in order to prevent that risk, you may have a variety of things. A simple example of preventing of risk is the lockdown, which most of the places in the country are facing today. Because we know that if we are grounded, we are at the home, the possibility of spread of virus is going to drastically come down. I read on a jovial note that, some places are actually unlock has started, some states, and people are saying that, don't be in a hurry to go outside your home because the virus is also in a hurry to come outside. Okay. So anyways, jokes apart. So what is this lines of defense? The first line of defense are those guys who are actually involved in the process. It could be from a management angle or it could be from an operational angle. These are the guys who are involved in the process. A simplest example is, I am into a quality manufacturing. I'm into a manufacturing of a product. Or let's say it is a simple thing like a soap manufacturing or a detergent. And I know this should be the minimum weighing scale, or this should be the minimum quality or the texture as and when the product comes out. And I, who am involved in the manufacturing itself, do some bit of checks. So that is your first line of defense. From a cybersecurity angle, a classical example is, we make sure that people do not write down their passwords anywhere, because it is a user responsibility. So those which are from the angle of a user fall within the first line of defense. Subsequently, you have the second line of defense, where you have some sort of a control, a financial control such as budget. There are some controls in SAP, Oracle, or any of this Navis and any of these ERPs that you cannot pass entry beyond this particular amount. There is a dual check. Information security, cyber security of the organization, the risk management exercise, quality inspection, all of this comes within the second. And please bear in mind, the first and the second line of defense normally is restricted to the senior management. But a good portion of the second line of defense also gets reported to the governing body or the audit committee. And then comes a very, very important exercise called as the internal audit. And this internal audit is just not restricted only to a financial audit. It is something which we have to keep in mind, that this internal audit is something which is fairly wide in scope. Of course, it may be done within the management or on behalf of the management, an external agency may do. Those are secondary. But the objective of an internal audit is to see whether the internal controls defined are being met. And what is an internal control? In a layman's language, any control or any activity which can reduce the risk is an internal control. A classical example could be, in our homes, we have that sump, the underground water tank, and the water from either the BWSSB or the local municipality comes in. And you just have a small ball sort of a structure. Why do you have the ball sort of a structure? It is a control. The risk is that the water will overflow. The ball sort of a structure is a control. Please excuse me for the examples which I give it. I always believe in giving the very fundamental examples and then going into the higher levels. Now let's look in from your own organization. You may have wonderful, antivirus systems. You may have DLPs put in place to ensure DLPs are data loss prevention tools. These ensure that data is not moving out, sensitive information is not being shared on email and whatnot, especially in this work from home culture. Now, given that scenario, there is somebody who comes and verify those things, and that is where the role of internal audit comes in. And then you have the external pillar called external audit and the regulator. Fantastic, this is fine. But look at your own organization, look at today's reality. All of this earlier was within my own control. Whereas today's scenario is, there are some elements I have outsourced or cloud sourced, which means an organization today, my dear friends, a typical user, I'll call it as an organization like your company, my company, or XYZ entity. This is called as a user entity for the purpose of my discussion. Now, what user entity does is, it invariably, my dear friends, invariably, today, due to various reasons, it could be strategic, cost saving, etc., or for specialization, today is outsourcing or cloud sourcing. They're outsourcing or cloud sourcing. And when they outsource, a cloud source basically usage of cloud applications in a layman's language. Now, what are these that these companies outsource or cloud source? It could be anything. The options are plenty. It could be as simple as your payroll processing. Your payroll processing, what happens? You typically, many of these organizations, you use either a third-party tool and your internal company itself processor, or you outsource it to any of these, maybe a CA firm or a CPA firm or a larger payroll processing entity. Some of the companies may have outsourced bookkeeping exercise. If you look into larger companies in US, they outsource healthcare claims, insurance claims, processing all of this into a typical setup. And with the dot-com bubble, with the BPO industry growing up, all of these things were a big amount which was getting outsourced. Some of the companies outsource support activities. Or forget about that, they may actually be using cloud-based applications. A simple G Suite for that matter. A simple G Suite or your Microsoft suite of products, or for that matter, even your, using AWS. Or we may be using SaaS-based products. A simple example of a SaaS-based product is Slack. Slack is one of a very popular internal communication tool. And I'm just giving as one example. There are hundreds of such tools. You may be using Jira, Confluence for your documentation and management. Yes or no? So in these scenarios, you are invariably using and relying upon a third party. Correct? Either it may be a SaaS-based company, it may be a cloud, which is basically IaaS sort of a setup, or you may be using it. But the biggest question in this entire issue, this entire cycle is, how sure are that these companies have strong internal controls? What if I have outsourced it to a person who claims to say that he has everything, but in reality, he has nothing? How do I get a comfort? You can say, okay, I'll go ahead and audit him. Fantastic. But you are an extremely small organization. You don't have so much of bandwidth and support. Or look at on the other side, you are too large an organization, you are not able to claim it. Or a third scenario, you are using Google Suite of Services and you say, hey, I'm using Google Suite of Services and I want to get a confidence in your applications. And therefore, I am going to audit Google. You think Google will give you the permission for it? If that's great. Correct? More than audit, it's a wonderful learning experience. But keep those aside. So how do I try to claim this? And not only that, on the other end, very critical, you have to keep in mind, this user entity is answerable to a bunch of stakeholders. It could be external auditors, InfoSec auditors, your VAPT pen testing assessors, or it could be your ISO compliance auditors or financial auditors, any of these folks. Or you may have to answer your customers. Your customers will say, hey, how secure are you? Or are you using any of the third-party services? Correct? Forget that. You may have set up your own internal security policy, vendor security policy, your GRC team. GRC stands for governance, risk, and compliance. So these stakeholders will say, hey, how sure am I that my outsourcing entity has taken care of these things? In case you haven't asked these questions, it's time we ask it. Because in the last 1 year, there have been plenty number of cases where because of an outsourced entity, the main organization had an impact. A classical example is the recent case of Air India. I'm sure you have read that, there was a huge breach, and unfortunately it was because of a vendor of Air India who had a major issue. Correct? And in fact, they rolled out emails and they said that, in case you have traveled between this period to this period, we highly recommend you to do this. That's okay. That's crisis management. That comes a little later. So we are looking into preventive exercise. So therefore, is there something which I can do to solve this problem? And that is where, instead of me or every user entity asking the payroll organization or a bookkeeping organization or healthcare organization, any of these organizations, to adhere to or appointing a separate auditors, imagine the payroll. Companies like ADP, there are massive payroll processes across the world. If every organization appoints a process auditor, it's going to be crazy. They will just not be able to accommodate it. Rather, these organizations appoint an auditor called as the service auditor. Okay, these organizations appoint what is called as a service auditor, and this service auditor is an independent CPA, certified public accountant, a person who practices in the US. Why US? Because the standard itself is a US based standard, and only a CPA can sign. Which CPA can sign, will little later we will address that. So this person has a framework or a guidance basis which he gives an independent opinion on the operations and the systems of these third-party outsourcing, cloud sourcing, whatever organization. And once that opinion is given, correct, that opinion is extremely handy for various stakeholders. Who are those stakeholders? All the users of the report which we saw on the left-hand side. And these include, my dear friends, auditors, customers, internal GRC users, and bunch of these things. All of these stakeholders. And what are the types of these reports? Here we're looking at a concept called SOC 1, SOC 2, and SOC 3. We will address this in a few seconds from now. So therefore, kindly hang on until then. Okay. So I hope the basic context you were able to get what we are discussing, because it doesn't make sense if we are deliberating into this domain without going too much into the depth of it. Okay, so that is the first part of this exercise. Now that we have a clarity in this entire what you notice over here, it's time we go to the next stage. Let us try to relook where this is going to come into the 3 lines of the defense model, which we just saw a few slides back, a couple of slides back. Now, this is what each of the lines of defense performs. The first line of defense is a typical self-assurance. They just give an internal confirmation within the existing stakeholders. It's an independent challenge that, these guys are supposed to do it, or, they are supposed to perform. Sometimes they may not perform, whatever. The second line of defense is where you have your oversight, your policy, your procedure. There is some sort of a QA, budget, everything comes in. And then comes your third line of defense. And let me tell you, the third line of defense has something called other independent reviews. And this is where your SOC and other activities come in. Please be reminded, this is not for the organization who is getting the SOC audit. It is rather for an organization who's utilizing the services of a SOC. Okay, so if I give a couple of examples, you may get much more clarity. So hang on until I finish the first stage, and after which obviously I'm going to open it up for Q&A, because after every section I thought I'll have a Q&A, maybe about 3 to 5 key questions we can take it, and maybe towards the end we'll probably have a few more, and depending on time we will take a call on that rest. Okay, so I hope you got a clarity on what the model of 3 lines of defense is and where the SOC actually comes into picture. Okay, so of course the first line is more of self-assurance and perform, whereas the second line is assure, monitor, to some extent perform, and the third is only given assurance, independent, monitor, and whatnot. Correct? So what exactly is SOC? Now we got the scenario. Let's now probably go into some bit of theoretical framework. Without that, we obviously cannot survive, right? So SOC stands for System and Organization Controls. Okay, I repeat, System and Organization Controls. When we had mentioned it as SOC in the brochure and other things, many of them did make a request that, hey, can you, we had mentioned it as Service Organization Controls and not this thing, but that was, just to give you a perspective that we are focusing on service organization and just not on the other SOC. We will address that a little later. You will get more clarity. So earlier, the concept of SOC was restricted only to service organizations. And who are those service organizations, my dear friend? Those bunch of players we saw in our illustration, the bookkeeping entity, the payroll entity, the cloud, whatever, they all are called a service organization. So I am a user entity. My company is using these services. These are all service organizations. Okay. So what happened, the background and the context was why it became even more popular is thanks to this beautiful act which came up, which is called as the Sarbanes-Oxley Act. Now, Sarbanes-Oxley Act is one such act which came up in US. Of course, it was 2002. We are probably celebrating 20 years by next year, right? 22 a year. It's about 2 decades old, close nearing 2 decades old. But the background why this came into picture was of the two scams, which most of you I'm sure would have read, the Enron scam and the WorldCom scam and whatnot. And people started doubting the powers given to the management. And that is when the Sarbanes-Oxley Act came into picture. We are not going to discuss too much into it, but just I'll give you a gist where it said, one of our key provisions said, the management and especially the CEO and the CFO has to certify the internal controls of the entire company, typically, which is more focused on the financial reporting side. So they had to certify whether the internal controls were in place and whether they were operating effectively. And what is an internal control? In layman's language, internal control is a policy, a procedure, a practice, an organization structure, any sort of a control which will ensure that the risk is prevented, detected, corrected, or the problem or the risk of me not achieving the objectives of the organization is prevented, detected, and corrected. And at the same time, it gives me a reasonable comfort that, hey, I know my objectives are not going to be affected. So that is the sort of a definition of an internal control. Now, the expectation from the management or the expectation from, if I could probably call it as the regulators, was that the CEO and the CFO had to certify, which means they had to define processes, SOPs, standardize everything, and each and every control had to be verified and somebody had to give the attestation on that. Not only did they ask the management to do, they also asked the auditor to give an independent certificate. And the predominant focus was on the financial reporting. But what has happened now? Many organizations started outsourcing a bunch of these exercises either to third world countries or rest of the world because of cheap labor or because of specialization or because of various strategic reasons. Now the management and the auditor wanted to get a comfort. If I outsource, is that entity also going to be having these controls in place? So for the entity which was typically listed, SOX, SOX controls were defined. For the entity which was outsourced, if it was their own subsidiary, they could force upon that subsidiary to follow the SOX compliance. And that's why companies, especially foreign companies who have their subsidiary here, they have to adhere to the SOX guidelines of the holding company. But if it is a non-related entity, meaning not in the capacity of a holding subsidiary, then it is a vendor, typically a vendor-customer relationship. Now, how can I force upon him my set of controls? Maybe yes, to a limited extent. But then I started mandating him to get what is called as an SOC audit. And that SOC audit was given to me as an organization. And I used to get a comfort. Okay, it makes sense for me to rely upon this film. Okay. And not just that, my dear friends, a SOC report by an audit firm, it gives an independent opinion that on the service organization, that is the outsourced entity, which is the payroll, which is the financial cloud, whatever it is, that they have A, controls, B, they are operating effectively. Very important. The word operative effectiveness is very critical. I'll give you a jovial example to illustrate this. You may find in most of these small banks or in certain small offices that there will be a security guard. Often you notice that the security guard is also, with all due respect, expected to go open the gate. He is expected to go and, those things are fine. He's expected to go get coffee and tea, or sometimes even, tiffin, and he's expected to go for running around. And in those cases, what happens? Often, when a person is actually coming in, the security guard is not there. Or on a jovial note, the security guard was sleeping. Of course, he's a human being, correct? But in all these scenarios, I had a control. But was it effective? The answer is no. So this is where, my dear friends, you will notice a huge challenge in this given domain. Correct? So that is where we have this. And let's also look into a very important thing. This report provides valuable information and assurance that the users need to assess and address the risk which is relevant to the outsourced entity. So that's typically a SOC. Okay. So I hope I've clarified. SOC is Systems and Organization Controls, formerly called as Service Organization Controls. And of course, that means earlier it was restricted only to service organization. Today it can be done for others as well. How? We will look into it a few slides later. So just be a little patient. Once you get most of these, basic elements clarified, I'm sure it will become much easier. Some bit of history and evolution, we obviously have to know, get an idea about it. 1974, what started off as a SAS 3, it was called as electronic. I'm sure the many of senior professionals will be able to relate this word. EDP audit was what it was called. Even now in many of the banks, when I go for an infosec audit or a review, they say EDP audit. EDP is electronic data processing. Today, everything is electronic data processing. That was a fancy word at that point in time. Today, it's got embedded with it. In 1982, came up SAS 44. This is where the first definition of service organizations came into picture. 1992, SAS 70, extremely famous. Even today, if you go to fairly senior professionals, they will say, if you say SOC, they may not be able to relate. If you use the word SAS 70, they'll be able to. It was extremly popular at that particular era. Then in 97 and 99 is where the evolution of e-commerce, information system reliability came in, web trust and systrust came in. And these both got merged and a concept called trust service criteria emerged in 2003. Very, very crucial in a SOC 2 engagement we're going to be discussing. And then in 2010, SSAE 16 came in. SSAE stands for Standard on Auditing Engagement. 16 is just a number. Now, it says how a CPA auditor has to perform the exercise. And there it says how, if he is auditing a service organization, what exactly he needs to do. That is what is given in SSAE 16. In 2011, they came up with the concept of SOC 1, SOC 2, SOC 3. Very, very interesting and revolutionary concepts. And in 2017, probably about 6 years later, SSAE 16 got replaced by 18, and 18 is the guidance under which the entire audit is performed. Okay. And then in 2018, they came up with one very interesting thing called SOC for cybersecurity. And then 2020 SOC for supply chain. These last two elements is where they started expanding the scope. They said we should go beyond service organizations, and therefore they also renamed service organization controls as system and organization controls. And that's how, things actually progressed. So I think the terminologies, most of us have got it, but quickly to recap. User entity is the entity that uses the services provided by the service organization. And service organization is typically that entity to whom you outsource. I hope the relationship is clear, and my image also helps you to clarify. Subservice organization is an organization which further, which is, the service organization sometimes outsources some exercise or some activity further to somebody else, and that's called as a sub-service organization. Again, I'll give you an example and illustration where we'll be able to get the entire thing. And the service auditor is an independent CPA who's auditing the service organization.
Narasimhan, are you able to hear us? I think I would request all participants to hold on for a minute. I think there is some problem with Narasimhan's connection. Just hold on for a minute, please. Yeah, Narasimhan, I think it got a little bit disconnected in a few 10 seconds. So I think we can restart from that moment, okay?
Apologies. I think there was some small network issue, and it keeps happening considering we're all working from home. Yeah. So ABC, as I told you, is the user entity in my example, because ABC Inc. has outsourced this exercise of accounting, bookkeeping, payroll, whatever to DEF. ABC is the user entity, DEF is the service organization, and the expectation is that DEF gets an independent audit done by an AICPA auditor who will be called as a service auditor. Okay, this will help what? The user entity, which is ABC Inc., confirm that the service organization has a predefined systems and organization control. And more important, the user auditor. Now, who's the user auditor? Auditor of ABC Inc. He gets a comfort that, hey, that the service organization to whom you have outsourced is reasonably clear. Okay, so that's the typical way in which it is provides. Okay, so what I would do is I will quickly give a few illustrations what are the types of services provided by the service organization and jump into the next domain. Customer support, I think we spoke of, telephonic post-sale supports, warranty inquiries, sales, and other things. Healthcare claims, a big chunk of this comes into picture. Medical providers, employers, third-party administrators, insured parties. There is this anesthesia, billing, and a lot of things which happen. Then we have enterprise IT outsourcing services. Now, these are typically those where you outsource a typical exercise of, operating your network, production, security, change management, your development exercise, and all of those. And then you have managed security, which is very popular. Your SOC, many organizations or many of you are forming part of team which does SOC for various type of companies, right? You have a shared model, managed security. Even you come into it. And last is the fintech companies who are actually providing technology coupled with finance. It could be peer-to-peer lending, loan, payment, and whole set of space. So if I have to give you a nutshell, this is how it is. You have a user entity that could be your company or my company. We might be using the services of Dropbox. Replace Dropbox with any other services, but for simplicity's sake. So a user entity uses a service from Dropbox, which is sharing data storage, retrieval, whatever. And it is expected that the service organization is supposed to have controls over it. What are the controls, policy, procedures, sort of independent things. And those controls give you an assurance that, hey, things are in place. Now, this service organization will go for SOC 1, SOC 2, SOC 3 type of reports. Please hang on for a few more minutes. I will give a clarification on this. Now, it may be possible that service organization uses the help of another organization. Typically, Dropbox is hosted on AWS. Your Netflix is hosted on AWS. Correct? So, of course, Netflix is not a typical service. It's more of a B2C entertainment platform. But let's just take Dropbox. That's a fantastic example. Now, this service organization uses certain other exercise or certain other domain of AWS, Amazon. Correct? Uses the service, and the sub-service organization also is expected to have a control over it. Now, how will Dropbox read it? How will Amazon read it? How will these things come together? All those things over a point in time we are going to discuss. I hope this has clarified the first introductory part of the concepts before I head into types of SOC. If there's any question at this point in time, probably I can take about 2 to 3 questions before I jump into the next.
Yeah, Narasimhan, I think we can take a few questions now.
Before that, I hope the things are going fine and you're finding it useful. My pace, my tone. If everything is okay, you can just probably give a thumbs up in the chat window, or okay, all okay, or whatever. Yeah, sorry, please go ahead.
Yeah, sure. I think we are getting a lot of messages in the chat window, Narasimhan, but we don't want to distract you. So yeah, keeping it. So let's quickly go through some of the questions, right? So you've already answered a couple of them, but still for the benefit of larger audience. A question from Bikram Raghuveer, who is qualified to do the SOC audits?
As I clarified, only a CPA can do a SOC audit. Or rather, I will put it this way, only a CPA can sign the SOC audit report. And this CPA, let me remind you, this CPA is not any CPA. He should have a certificate or a license to practice. It's like you going to a doctor. He can either have his own clinic or he may work in a hospital. So if he's having his own clinic, he has a license to practice. If he's in a hospital, he normally does not have a license to practice because he's an employer-employee relationship. Yeah. So it has to be a certified public accountant who has a license. And very, 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 very important, not every CPA who has a certificate of practice can also sign. This is something very crucial you have to understand, because so just like how we have in India, we have one authority called ICAI. In US, there is one authority called AICPA. But the way US it works is AICPA has got a lot of state boards. Okay, each of these state board has their own different set of rules. Some state boards clearly define that you can practice only in the US. So which means an Indian CPA who is residing here may not have the permission to sign it unless he has an entity in the US itself. So the US entity has to sign. On the contrary, there are certain other state boards. This is only if you discuss with the CPA and the state boards, you'll get a clarity. This is something very important. Many of them miss it out. Some of the state boards clearly clarify it is your choice. Do what you want. As long as you are adhering to the professional standards, we don't give you any restrictions. Now, one such example, what I can think of is Montana State Board. Now, Montana State Board is given a freedom where you can go ahead and practice and you are permitted to sign. Even if you are based out of India, you can sign it for the global audience. I hope that clarifies the question.
Yeah, that clarifies it, but a kind of a complementary question to it is like, so the CPA gets the final authority to sign the audit report, but the CPA himself cannot do the entire SOC audit. Right?
Yeah, so that is where that part, I didn't answer it on purpose because I have opportunities section which I want to discuss.
Okay, so
and that is towards the end. That is the brownie points for all of you if you stay back until the end of the session.
Sure. So the next question is from Pratana Shetty. Do we obtain SOC report if the entire actuarial process is outsourced? How do we know when SOC report is not applicable? So there are two parts of the question. One question is around the actuarial process, very specific to a business. Do we get a SOC report if that process is entirely outsourced? And second thing.
Okay, so when you say an actuarial process, I'm presuming you're talking about an insurance space where there is some bit of actuarial valuation and other things done. Yeah. So let me remind you over here, Normally, we don't go for a SOC report where the organization is a professionally run organization, which is based out of professional standards and ethics. Normally, I use the word normally, there's no thumb rule. To give an example, if you are outsourcing the accounting work to a CPA firm, you may not want to get, because you know they're a CPA firm, they're experts in that. Likewise, actuarial sciences, they are experts in it. You may not want to go for it. You may not. Okay. But having said that, for your internal comfort, for various reasons you want to go ahead, please go ahead. Point number one. Point number two. Nowhere SOC is mandated. But if you are a listed company based out of US for whom SOX is applicable, or you're a subsidiary thereof, and you in turn have outsourced it to somebody else, now your auditor, in my example, the user entity, your company's auditor will want to get a comfort, boss. I am signing your balance sheet, but I am not sure whether your outsourced entity, which is that whatever XYZ ABC, whether they are good enough. So I want to get a comfort, and therefore I will force the organization, and the organization in turn issues a request to the service organization, and therefore they go for a SOC. Third, many a times by virtue of contractual requirements, SOC is made mandatory.
Okay. So, yeah, I think that clarifies a lot, Narasimhan. So let's move on to the next section.
Perfect. Thank you. Thank you so much. Okay. The next question is, what are the types of SOC? I see many questions coming in. I'm sure I will address them. A couple of them are also coming on the chat window. Humble request, please post them only into the Q&A window. I will once again give you a summary or just I understand some people may have joined in late, etc. We will address, see what best is possible. Now, first, the second section is, what are the types of SOC? Now here, the SOC, the AICP has come up with what is called as a suite of services. A is SOC for service organization, and that is the large section which we are going to be discussing. Okay, just we will make a reference to the others too. Okay, and please bear in mind the SOC 1, SOC 2, SOC 3 was the first thing which came up, and then you had the SOC for cybersecurity and supply chain which came in. SOC for cybersecurity and SOC for supply chain can be obtained for any organization. I repeat, any organization. Whether they it need not be the outsourcing entity only. It can be any organization, correct? Because it is not restricted to service organization. And as I reiterated in the previous slide, SOC stands for System and Organization Controls, correct? So earlier it was called as Service Organization Controls, which over a point of time matured, and therefore SOC for service organization is 1, 2, and 3, and SOC for cybersecurity and SOC for supply chain can be for anybody. Point number one. Now, what does each of them mean and how is it relevant? We are going to understand, because this will help you to ask your vendor or your client what is the report you want. And in case you have not asked, it is high time you get started with it, because earlier it started only because of compliance. Today it is it's become a practice. And if you go to many of these companies' website, they will put in below ISO 27001 certified, SOC 2 compliant, and all of those. Why? It indicates maturity level of an organization. Maturity level of an organization, that's something which is very much need of the hour. So the first one is SOC for service organizations, as I told you. It gives an opinion on the quality of internal controls and the services provided by the service organization in relation to the user entity, of course. And it provides valuable information, lot of information, which otherwise you will find it extremely difficult to give it to you. Okay. In fact, in SOC reports, you have something called as assertion, and then section 3, which is called as the management description. The section 3 of a SOC report, we'll come to it a little later. I'll see if I can show you some samples. It talks exhaustively of the processes which is there in that particular organization. And in fact, it talks to such an extent that it even says how your network diagram is, what is your network structure, etc., etc. And that is the only reason why a SOC 1 and a SOC 2 report can never be downloaded from a Google. You will never get a SOC 1 and a SOC 2 report. It is not publicly available. They are restricted agreements, and you need to sign NDAs when you're downloading it. NDA could be a digital NDA or whatnot. Sometimes in the report, it will say that this is given only to ABC and nobody else. You shall not give it to anybody. With your name and credentials, it will come. Just like how, when you download the ISACA document, you'll find your membership ID and your details on the footnote. And this SOC reports has got 3 types, as I told you. SOC number 1, SOC 1. It is SOC for service organization on ICFR, internal controls over financial reporting. I repeat my statement. Internal controls over financial reporting. Then you have a SOC 2, which is based on trust service criteria, and SOC 3 is a general use report. SOC 3, anybody can download even by a basic Google search, and I'll show you how you can get it also in today's discussion. Okay, I'm trying to make it as pragmatic as possible because pure theory becomes too much for us to handle, correct? Yeah. So let's go into each of these steps. SOC 1. SOC for service organization, ICFR. And what does ICFR stand for? Internal control over financial reporting. The purpose of this report is for any organization which is outsourced financial related exercise. Based upon the activity which I have given to the outsourced entity, my financials may have an impact. Mine, I am who? User entity. The user entity's financials may have an impact. Therefore, the user entity's auditor will say, hey, please get that thing done. And that is where the purpose. To meet the needs of service organizations and auditors of the client. Who's the auditor of the client? The user entity. So evaluate the effect of controls of the service organization on the user entity's financial statements. Please bear in mind, already the user entity is to comply with SOX, SOX. And I told you under SOX, you have to follow a mandatory requirement of the CEO and the CFO certifying your financial state, internal controls. Not just that, the auditor has to give an independent opinion on the internal controls. Now, let's presume my entire accounting activity is outsourced to companies like Accenture or, any of these large companies. Now, I cannot say, boss, everything is compliant because the entire exercise is done by them. So therefore, you need to verify the controls of Accenture. Either you go and an audit or Accenture as a service organization gets an independent audit done and submits it to you. Okay, assess the fairness of the management description. Very, very, very important. This line is extremely important. See, if you're doing an ISO 27001 audit, I'm sure most of you would have experienced it or you've got a fair bit of it. What are you auditing? You are auditing A. What is the scope statement first? Context. Once you're done with this, amongst the various things, you look into the requirements of 27001. What is the management framework? Then you have mandatory things, and then typically the 114 controls. That is your typical high-level statement at a high level, correct? If you are auditing a balance financial statements, what are you auditing? Balance sheet, P&L, cash flow statements. If you are auditing a SOC, you are auditing the management's description of the service organization. So the management has to describe the service organization. How to describe? Hang on. One thing at a time. We'll go one thing at a time. So that is also a part of the package today's session. We'll be covering that. Now, as an auditor, you will assess whether that management description is fair enough. As an auditor, you will have to look into management description is fair enough. And many of them keep on asking, sir, this can be signed only by CP auditors. What will ISACA professionals do? My dear friends, you have a whole lot of opportunities in just drafting this. Drafting and making the documentation. You can also go ahead and do internal audit, verification, whatnot. A lot of consulting work you can do. The certification and the sign-off has to be done only by a CPA. Prior to that, all the preparatory work you can definitely go ahead and do it. Now, you need to use these reports. As I told you, it is restricted only to the management of the service organization or the user entity or user auditor. In fact, in the audit report, it will clearly mention one clause. This is restricted use report and nobody in the earth can do it. If you want Infosys balance sheet, you can download it. You can get their audit report. But if you want Infosys SOC, anybody cannot download it. Presuming Infosys has a SOC, I do not. Now, each of the SOC, Okay, each of the SOC. Okay, rather, let's go one at a time. SOC 1. SOC 1 has got two further categorization, a type 1 and a type 2. I repeat, SOC 1, we understood SOC 1, SOC 2, SOC 3. Now, each of the SOC 1 and SOC 2, not SOC 3, SOC 1 and SOC 2 have further two classifications, a type 1 and a type 2. A type 1 report says that as on a particular date, this is how your internal control design existed. I repeat my statement. Feel free to sip your coffees or tea as the case may be. Yeah. So a type 1 SOC 1 report is an opinion on the internal control of what? The service organization, opinion on the internal controls of the service organization on the entire design as on a particular day. For example, 31st March, or most of the cases SOC, they go for 31st of December because the US calendar is that way. As on 31st of December, how was their design structure? And what is the meaning of design? You are just saying that these controls existed. And you may probably pick up a few samples to verify. That's all. You are not verifying the effectiveness of these controls. Whenever we speak of internal controls, there are two critical words which you should bear in mind. A, design. B, operating effectiveness. Design is the structure based on which the control framework sits on. A simple example could be you have a SOP, you have a policy, fantastic. You have a design. Obviously, that has to translate into execution. So you may probably just pick up one scenario and say, okay, fine, this is what your policy says, this is okay. That is your design. Your effectiveness checks whether you are following it consistently for a period of time. Look at the wordings I'm using. A design is at a point in time. Effectiveness is for a period of time. That means a type 1 report, you focus on the design of controls as on 31st March or 31st December 2020, 2021. In a type 2 report, you check the effectiveness, in addition to the design, obviously, whether they are operating effectively for a minimum period of time of 6 months to 12 months. And this is where the beauty is. I'm sure all of you agree, when we started off with one security implementation, at that point of time, everybody did every implementation. Extremely happy organization was. The moment you got that certificate from the third party, everything we forgot. We went back to square one. It is only the organization's commitment coupled with the leadership which will ensure you adhere to those guidelines consistently, and that is what a type 2 report does. A type 2 report operates, or rather gives you the design and the operating effectiveness of the controls for you to achieve whatever is the objective. And this has to be for a minimum period of 6 months. So if you're going for a December certification, maybe July onwards will be what you'll be looking into. So many of the organizations will be going, if you're going for a first time, you go for a 6 months. And after the first time is over, you always go for entire period of 12 months, unless there has been some challenge. Okay. And very important. Unlike a certification, which is just one page, this is a report. So if you happen to read SOC reports, I hope 1 cup of coffee will not be enough for you, because it runs minimum into 75 to 150 plus pages. So imagine the plight of us who are drafting it, right? It's obviously a Herculean exercise. Why? A type 2 report, very important. This is where you get the utility. Every control defined by the service organization, the CPA will audit them by picking up samples as per the international sampling methodology standard, which typically says if the process is high risk, you pick up samples at least of 30 to 45. If the process is low, medium risk, you pick up 30. And if a process is low risk, you need to pick up 15 samples. Verify those samples. If any one of the sample fails, pick up additional 15 or 10 as the case may be as per the standard, and once again verify. If one more sample fails, the entire control you will call it as ineffective, and in the report you will mention this control is ineffective. Now imagine you are in the service organization for a minute. Somebody clearly says, boss, you have a VAPT exercise which is ineffective. And obviously he's a competent authority. You can challenge, question, discuss. You go ahead and he gives you an opinion. Now imagine that report goes to a user organization or whoever your customer is. It's a slap on the face of the organization. Why? Because it clearly says you may have a wonderful design, but it is not operating effectively. And that is where, my dear friends, I would like to re-emphasize the beauty of a SOC to us, a type 2 report is where you test the effectiveness of the internal controls. Of course, there could be a very rare exception. Management is permitted to give an explanation for it. It comes as section 5 of your report, or maybe as an additional column. That is okay. But imagine the impact it would create. And normally organizations are going for a first time adoption, go for a type 1 report in year 1, and probably in a span of 6 months, ensure all these controls are compliant, and then go for a type 2 report. And after that, it's a yearly exercise. That's the typical program. Now, type 2 is a little different. Okay, I also saw one of the questions somebody asking, is there not a SSAE 3402 standard which does that? Yes, SSAE 3402 in India is acceptable and an Indian chartered accountant can sign, but he cannot sign under the auditing guidelines of AICPA. He has to sign under the guidelines of SSAE 3402 issued by the Institute of Chartered Accountants of India, acceptable only in India. If a foreigner is able to accept it, I mean, he has to take a risk assessment and then he has to do it. He may probably, this is a call. Okay, that is point number 1. Point number 2, the SSAE 3402 speaks only of a SOC 1 service. It doesn't speak of a SOC 2 service. What is a SOC 2 service? That is something which I'm going to just address in the next slide. Now, today, what's happened is there are a good number of players to whom you have outsourced non-financial aspects. Now, this is where the beauty is. I have outsourced non-financial elements, but I need to get a control over it. How do I do it? That is where this beautiful concept of a trust service criteria comes into play. Now, what does this trust service criteria do? It has defined 5 criteria basis on which any user of the service organization's audit report will get a comfort. And this is gone beyond the financial controls. I repeat my language, it's gone beyond the financial controls. And what are the 5 trust service criteria? Security, that has to be a compulsory criteria. Availability, processing integrity, confidentiality, privacy, these 5 things. And each of these words we are going to discuss a little into detail when we come into the next slide. So this is intended to meet a broad range of users and detail information and assurance. And they play an important role from a oversight of organization, vendor risk assessment, internal corporate governance, regulatory oversight, whatnot. Because here you go beyond financial controls. Please bear in mind, you go beyond the financial controls. You're focusing on security, availability, processing. So you're talking about how secure is that organization. Now you can say I'm a very secure organization. There should be a benchmark, right? What is that benchmark? That is what the trust service criteria defines. We'll come into it in a few slides. Okay. And here also you have a type 1 and type 2, which is exactly similar to that of SOC 1. But SOC 1, ICFR, SOC 2, trust service criteria. Then comes a very interesting thing, which is SOC 3. I will address that. So what is this trust service criteria? I've just given a few examples just for you to get an idea. Security, focus on network, application, 2-factor, intrusion. Availability, performance monitoring, disaster recovery, security incident handling. You have privacy, access control, 2-factor, encryption. How often or how well are you taking the, user consent on that? Then you have confidentiality, again, a few elements of, you'll find a few common elements again here and there. And then is processing integrity, quality assurance, and quality. So what are these 5 names and where is it relevant? Let me also remind you, when you go for a SOC 2 audit, you can choose any of these 5 or all of these 5. for certification. I repeat, any of this 5 or all of this 5. However, the thumb rule is security is mandatory. Thumb rule is what? Security is mandatory. That means a service organization may go for a SOC 2 Type 2 certification with all the 5, or he may just want to go for security. That is his choice. That is his choice. So this is where the beauty of customization also comes in. And this is where if you are a reader of a SOC report, oh, just because my customer is giving me a SOC report, happily take it and put it in the compliance folder. No, you have to verify what are the criteria which is applicable, which is defined and not defined. Very crucial. Security, what does it focus? The information and systems are protected against unauthorized access, unauthorized disclosure, damage to systems, all those traditional things, and shall not compromise the other 4. Look at the beauty: availability, integrity, confidentiality, and privacy. You getting the point? So security is, that is why it is said it is mandatory. Now you as an organization, or maybe the client may request that, get all the 5 done, or in certain cases only things. I'll also speak about exceptions, how it works. Availability. Now you are a platform based upon which a typical cloud service platform, like an Amazon. Now, don't you think available is critical? The answer is yes. So for you, you will mandatory go for availability. Information and systems are available for operation and use of meet the entity's objective. It is mandatory. Then you have confidentiality. The information designated as confidential is always protected. So most of the times, security, I told you it's most common. Availability and confidentiality are the most common criteria basis on which the report is done. If you pick up Amazon report or Google Suite or your Microsoft, any of these companies, my dear friends, they get the certification done for these 3 criteria. Now, processing integrity. This is very important. Look at the wording. The system processing is complete, valid, accurate, timely, and authorized. Now, this is applicable for all those companies who are performing certain processing activity. Now, what is the meaning of a processing activity? I, as a user, give an input to you as a service organization. You process it and give it back to me. A classical example is SaaS-based companies. Let's say you are, a portal. You are a portal which does certain XYZ exercise, where I give you the input, you do the computation, calculation, whatever, payroll, whatever may be this thing, and you give me back the result. So wherever there is a processing involved, okay, then this comes into handy. Many a time, some companies may not be processing anything. I have noticed, especially in case of BPOs, they may be processing as a SOP, but the system and the infrastructure belongs to the client. Therefore, they may choose to be exempted under processing integrity, and they may be justified for that as well. System processing, look at the word system processing. It is not you as an organization which you're processing, you're looking at the system. Correct? System processing is complete, valid, timely, accurate, ... So what is a system? It may be a software, it may be a SaaS-based application which you're doing. Last comes privacy. Only in the last few years, privacy has been made mandatory. Otherwise, many of them who used to choose the exemption route. I'll give you a background about this. Now, what happened was a few years back, the Canada Institute of Accountants and the AICPA came together and said, we will set up what is called GAAP. Okay, for accountants, you would have heard this word called GAAP, Generally Accepted Accounting Principles. This is GAAP, Generally Accepted Privacy Principles. Under those privacy principles, they came up with 10 broad pointers basis on which any organization has to focus on privacy, and that's where a lot of maturity and whatnot. Now, from that, they extracted a good set of points and they developed a small privacy checklist or a framework. And here, the focus is on how an organization collects, uses, retains, discloses, and disposes of the entire personal information, or what we call it as PII, to meet the entity's objective. A BPO or a B2B company to whom I am outsourcing may not be collecting any PII data. Rather, the PII data may be collected by the user entity. Example, there is a company XYZ Inc. There, they are doing some insurance related claims or whatever in the hospital industry. They are outsourcing some work to a BPO in India. The BPO in India is merely doing some data entry, putting everything, and where? Not in this fellow system, in the system of the US entity. So there is no processing integrity may not be applicable there, and privacy, I need not take the user consent. So entire privacy may not be applicable. Maybe marginally it may be applicable. So that is why the focus on many of the companies when they go for is security, availability, and confidentiality. Processing and integrity and privacy depends on a case by case. We'll have to look into it. We'll take up Q&A probably in a few minutes from now. Yeah. Then many of them ask, sir, how many controls I have to apply? How many points I have to follow? This is something very critical. If you look into ISO 27K, you have 114, correct? And of course, you can, if one of the control is not applicable, you give a justification. Here, all of those things are not mandated. Here, they've given what is called trust service criteria, and I told you 5 trust service criteria. Now, each of this trust service criteria have got further breakup of what are the principal requirements. This is based upon COSO requirement. Principle 1, Principle 2, Principle 3. COSO relevance, we'll come back to it little later. So I have defined, if I am following a security common control criteria, 33 requirements are there. These 33 requirements are further broken down into 214 points of focus. That means you need to have 214 set of controls at a high level. You may merge those controls. One control may be applicable for multiple things. Those are all practical. Those are all possible. But at a high level, they say whether these 214 points, have you taken care of it or not? If the answer is yes, then you have met the trust service criteria of security. Now you have availability, for which 13 is the total requirements, and of which point of focus is 15, confidentiality 2 and 4, processing into 5 and 18, privacy is 18 and 51. This is just a math game for you not to memorize, but just for you to be aware that there is something like this. Okay. Now comes SOC 3. These are considered as general use report, which means anybody can download. You can probably even now Google search or after my session, download SOC 3 of any of these companies. If they have it available, you can get it. Okay. Not every company goes for it. Probably towards the end of the session when I'm showing sample reports, because these are publicly available, obviously I'll be able to show it. The SOC 1, SOC 2, I have restriction. I will not be able to show. But there are formats which I'll try to give you. Okay. And let me remind you, a SOC 3 is nothing but a summarized SOC 2. That's all. In simple language, it will not have every information. It may not have the network infrastructure map and other things. It's just a summarized information. SOC 3 does not have type 1, type 2. It is just SOC 3. Okay. So that's basically about the types of SOC report. So the summary, SOC 1 is ICFR, internal controls of financial reporting. SOC 2 is security, system, privacy, confidentiality, integrity, availability. Of course, integrity is just not integrity, it's processing integrity. Okay. Then you have your criteria. This is based on control objectives of SOC 1. A SOC 2 is based on the trust service criteria. The purpose of SOC 1 is typically financial statements. SOC 2 is your GRC programs, oversight, vendor diligence, etc. SOC 3 could also be used for marketing and other purposes. Usage of the report, typically user auditor and user entity management. SOC 2, any person, regulators, others. SOC 3 is just open, anybody and everybody. And types, do I have further types? SOC 1 and SOC 2, you have type 1, type 2. In SOC 3, you do not have any further types. Okay. So how do you decide which type of a report is necessary? This is very important. After having understood all this, now you are a part of a service organization, or you are part of your client, a user entity. Now you want to ask your service organizations, hey, please give me this report. How do you decide? The rule is very simple. Anything to deal with customers' financial statements, anything to do with your user entity's financial statements. Oh, SOC 1, simple, end the story. Type 1, type 2, based upon what you need. Second, do I need to get a confidence or trust at a high level? You can go for a SOC 2 or a SOC 3. But if I want to get a detailed understanding of every control, how you are processing, etc., SOC 2 is the only answer. Simple, 3 simple approach. I didn't want to put in a flow chart, just a yes/no approach. Now, this is what is the other new fields which is coming up, and this is not restricted only to service organizations. Going beyond that, SOC for cybersecurity and SOC for supply chain. Here also you have something called as, like the trust service criteria, you have 4 or 5 things defined, and there is, for each of them, let me remind you, there is a detailed guidance available with the AICPA. So if you want, you will, of course, the challenge with AICPA is all these guidelines are paid and you cannot download as a book. It's a subscription model. So you get access to their web portal on a yearly basis. You need to keep on renewing it. Okay, so that's one challenge, but that's how their model is. Let's not go into this. Okay, at this junction, I'll probably stop for a couple of minutes. If I could take maybe 1 or 2 questions before I go into other related terminologies. I know a few of them want to see how these controls look like. I will show you a sample.
Yeah, I think Narasimhan, we have got a lot of questions, but again, I was able to map some of the questions that already answered in the last few slides. But just to go with, like, there are a lot of questions around. Can you name some of the firms who does SOC audits in India? Some of the firms. Because
I'm here. Hello.
Yeah, a lot of Big Four firms, a lot of organization does it. So that is
a good number of people. Maybe we can catch up offline to discuss. But generally, you need to have a CPA who actually does that.
Yeah. So I think there is a next question on from Rifa Mary. You talked about the sample selection criteria. So how it is kind of very relevant and how it has to be seen, the sample selection criteria. Can you?
Sample selection is extremely critical because please bear in mind an auditor is performing an audit exercise, the CP auditor whom I spoke. Now, when the CP auditor performs that exercise of, verifying, validating, ... A very important point to bear in mind is that he has to follow the acceptable sampling criteria. And there's a huge guidance on that. I don't want to go in depth into it. It is based upon law of statistical relevance, etc., where you define based on a particular thing. Let's take an example. You have defined a control. The control is on a periodical basis, audit logs are verified. A simple control you mentioned. Now, or you can say on a monthly basis or a quarterly basis or on a fortnightly basis. So now what you will do is you will go back to your simple Excel spreadsheet, identify how many fortnights are there in a year, which is typically 104, 52 weeks, probably around 25, 26 fortnights. And 26 fortnights, you may probably want to say, okay, give me of April, May, June, or any random thing based on a sampling criteria. There could be certain things, some controls are applicable daily. For example, in case of a BFSI sector, they may have some sort of a daily security closure exercise which may happen. So you may probably pick up a sample like that. So it is a little subjective. It is also based on each of the control. And for this, I have to go too much into the depth of auditing controls and other things. I want to refrain from it because this is just an introductory session.
Yeah. So I think there was another related question also from Sachin. Does the sampling also depend on the frequency of the control? So you answered it right? It depends on the control and the situation, all it takes. Yeah. Okay, let's go to the next question. I think this is also a common question which people, the security professionals face or the auditors face. From Akshita Naik, the question is about the bridge letter. So
I'm addressing that in a few minutes.
Okay, so let's pass the bridge letter for some, right? And okay, let's go to the next.
I'll talk about the assumptions also. When I come to that domain, I don't want to.
Yeah, sure. So I think, yeah. So there's a question from Soumitra Gupta. If a service organization hires contractors from third party, is that called as third party sub-service organization?
Excellent question. Just wait for 2 minutes. I have to some extent try to explain that. When I speak about what is sub-service organization in my related terminologies, I'll cover that. Please be a little patient. I've tried as much as possible to make it very exhaustive.
And there's another question from Vijay and Muralidharan. Do we have any separate assessment for performing SOC audits, either internal or external? Like, how do we have an ISO 27001 lead auditor, kind of a checklist? Do you have a checklist?
Very good question. Very good question. Normally what happens in a SOC, I told you that compliance framework, one of the things is, how are you, if you remember, I spoke of this trust service criteria. One of the points of a trust service criteria or one of the points of objective for reference, all of this make a mention that you need to have a risk monitoring exercise. And as a part of a risk monitoring exercise, the organization will mention one of the control that we perform regular internal audits. Because you cannot wait only until the statutory auditor comes or a CP auditor comes, correct? So you need to have the 3-line of defense model. So which means there is definitely an element of internal audit also, just like how you do an ISO 27001 internal audit. In a SOC also you have an internal audit. However, your sampling methodology and the way you work, you will have a change. In fact, if you wait for a little longer, I'll also explain the interrelationship between 27001 and the SOC, how many controls are there, not there, and I'll also give you some free notes on that.
Sure. So I think, yeah, so those are the questions. I think some of the questions I know that we'll be addressing in the upcoming slide. So yeah, we can go on to the next part. Thanks.
Thank you so much. Thank you so much, audience, for being a little patient, because we also have to cover a good portion of content, right? So I think we are a little more than halfway through, but let me speed up now. Now, one of the things which we normally speak of is sub-service organization, very important. Now, this is where if you are either an implementer or you're a reader of this report, you have to be very, very careful, because these terminologies are very confusing. And that's where I keep on saying, just because you have a SOC report, do not go 100% and rely that, hey, that fellow is compliant. Please read and interpret the report. Not that the auditor has not done a good job. The auditor has definitely done his professional work, but there are a lot of caveats in that report, and you need to understand how you interpret that. There are a lot of exclusions. Okay. So first and foremost, a service organization may be using the work of a third party. A service organization may be using a work of a third party. For example, Dropbox using the services of AWS. Then AWS or Amazon is called as a sub-service organization. In an idealistic situation, the auditor or the management has to identify the extent of reliance between both of these folks. In a Dropbox situation, if Amazon fails, Dropbox cannot work. You can probably call it a single point of failure, whatever. There is highly concentrated or closely knit connection. In the case of Netflix, of course, Netflix may not go for a SOC report because the purpose is different. Let's presume a Netflix for the time being was a B2B solution. Now, they are also based on AWS. If AWS fails, Netflix has a failure. The answer is yes. And I'm sure many of them would have kept on noticing suddenly small outages, 3 minutes, 5 minutes, and it is bound to happen. Nothing is foolproof. Nothing is foolproof. Let's be very clear on it. So a service organization used by another service organization, you can get covered. Typical examples could be supporting vendor, contractor, service. Now, answering one of the questions which just came in the previous, right? Now, I am using manpower outsourcing. Now, what is the extent to which it is relevant? Here is where it comes. Now, the very focus is this sub-service organization should be relied upon to support the main service organization's commitments and system requirements. Very important wording. Means what? Now, a service organization may have multiple vendors. So will I take all my vendors and do a SOC audit on them? It's not impossible. A simple example. I'm a service organization. I may have probably taken the help of, let us say, what is this? People who will do housekeeping, who are people who may manage my canteen. Now, do I expect them to do it? The answer is no. They're providing a simple allied services. I may be using a manpower supply. Now, the question is that fellow is just supplying. By virtue of the SLA, all the things are bound by my rules and instructions. So that organization, I need not worry too much whether they are compliant or not. So it may not be a relevant sub-service organization in this contextual example. I hope I've clarified. So they have to rely upon that sub-service organization for the service organization's commitments and system requirements. Now, what are commitments and system requirements? It is based on the infrastructure. It is based upon what I call it as, let's say, your SLAs and your terms, etc. Now, for example, now an organization is using GitHub. A service organization is using GitHub. Now, GitHub, I think it's a fairly, very, very important, right? So now GitHub will compulsory be a sub-service organization. You're using AWS, you're using G Suite, all of this will become sub-service organization. On the contrary, you're using one small application only for drawings and other things, or for very incidental exercise, which may not be very crucial. It may not be a sub-service. So this is where test of judgment comes in. And this is where we cannot go by a rule book. We have to rather go by a principle. Okay, next. Entities that are service organization outsource some of their operations to. I think I explained this. SaaS company utilizes the service of IaaS companies. Very important. Complementary subservice organization. So we spoke of service organization controls. Now we speak about complementary subservice organization controls. That means earlier we spoke of the trust service criteria. In the trust service criteria, one of the criteria is, let's say, physical security. Now, if you ask Dropbox about physical security, they will say our physical security is restricted only to our office movement, ... We have video camera, we have CCTV, all those things. Fantastic. But can they vouch for the video cameras and physical security in AWS servers or for that matter Azure servers? No. Which means there they will write one point saying not only we are dependent on our controls for this objective to be achieved, we are also dependent upon Amazon's controls, and for which the organization, which is Dropbox, has to take the Amazon's report, read it and understand and interpret it. I hope you're able to get it. Correct? So that is where complementary subservice organization comes in. When the controls at the subservice organization in combination with controls of the service organization, look at the beauty, are necessary to achieve the control objective in the case of a SOC 1 report, or are necessary to meet the trust service criteria in the case of a SOC 2, then such controls are referred to as complementary subservice organization controls. I'll give you examples. Hang on, relax. Everything is covered as a package. The CSOCs need to be specific to the services provided, very specific. If it is nowhere related, why should I bother? Classical example, physical security is dependent on AWS or Azure if you're using a typical IaaS services. Correct? The description of the service organization system needs very crucial. And if you remember, I told you what is the description, that is what we are auditing. Just like our balance sheet P&L, the management description is what we are auditing. Correct? So the description of the service organization system needs to describe the sub-service organization's responsibility in implementing that CSOC. That means you are saying, I, along with my controls for Dropbox, I'm also looking into AWS's control, and holistically, only if it works, then it's said to be effective. But whether I verify that control or not, hang on, it is also covered in the next slide. Okay, so we have two methods of reporting. We'll come to it. So only in those cases, typically in a type 2 examination, we look into operating effectiveness. In a type 1, we look into the design. Okay, a few examples of CSOCs. CSOCs are basically complementary subservice organization, service organization. Controls relevant to completeness and accuracy of transaction processing on behalf of service organization. Controls relevant to completeness and accuracy, physical access, data center, all of these may fall under a complementary CSOC. Now, just like you have a complementary CSOC, there may also be a complementary user, okay, which we'll address it in a few minutes to come. Next, there is something called as an inclusive and exclusive method. Now look at this. Now you are an auditor of the service organization. Now service organization is using the services of some multiple parties, Amazon, Slack, whatever. You're using all these services for Dropbox. Now even in this given context, now as an auditor, should I read Dropbox as an isolation, or should I include Dropbox plus Amazon plus Slack? You can imagine what is the extent, right? So that is why they came up with two methods, inclusive method and the exclusive method, or the Carve Out method. In the inclusive method, control activities performed by the sub-service organization, in my example Amazon, are also included within the scope of the report. You can imagine how heavy that report is. I'm auditing Dropbox, equally I need to get all the controls of Amazon. Correct? So this should be clearly identified as a sub-service organization. For this, you need to get a written statement of assertion from the sub-service organization. 99% this is not possible. 99% this is not possible. He will not agree. I will rather say, you take my SOC report and go. But in some cases, it is possible. Let me give you another scenario. I am a company who's providing some XYZ services. I do not have an in-house developing team, and my entire development is outsourced to somebody else. Let's say a team in India. Now the team in India is completely in charge of the product. Of course, based on the instruction, this team is expected to have all SDLC principles, what or not. But this company, which is based out of US or based out of any other location, is only, let's say, front-ending, marketing, whatever, not. In that scenario, I may have to integrate both the players and read. I may have to go for an inclusive method. Then I have to take a declaration and the assertions from the subservice organization. However, if that subservice organization is a SOC 2 compliant, I'm okay with it. Or if they have fairly some bit of, ISO and other things, I'm okay with it. That means, if you remember in GDPR, there's one principle. Not only you should be compliant with the data privacy, your entire supply chain should be compliant. Same way, when you are having a subservice organization, there could be, in fact, that subservice organization may be using some other organization. So the link will keep on going. Third party, fourth party controls, fifth party controls, we call it. So that means you need to take all of them holistically and design. Correct? And that is where, of course, there is some amount of knowledge limitation. You can't expect who Amazon is using as a service provider. But by reading Amazon's SOC report, you may get some insight. Okay? Carve Out Method. Here what we do, we are totally ignoring, I repeat, we are totally ignoring the control activities performed by the subservice organization. So they're not even identified. We exclude it and we will say that to this extent we are relying upon that person. And how are we placing reliance? Because there's an independent CPA who's audited. Otherwise, we will give a disclaimer. We'll have to give a disclaimer. When I say we'll have to give it as a CPA. The third thing is complementary user entity controls. Complementary user entity. Now, complementary user entity controls, my dear friends, are those controls which the service organization expects from the user. That means Dropbox expects from you as a user. See, now we were focusing earlier now on the backward supply chain. Now we are focusing on the forward supply chain. That means on the customer's end. Service organization is given the Dropbox facility to a user. It is reasonably expected that the user has to keep his secure username and password. Just because the user misplaced the user ID password or somebody hacked it, can you blame Dropbox for it? Normally, no. That is where every service organization, this is very, very important for the users of the service organization report. Now you are in a management, you are a CISO, you are a CXO, whatever, you get service organization reports. Please evaluate CUECs, complementary user entity controls. In fact, those set of controls, you should have a process. If you don't have a process, we are in one more risk. We are in one more risk. And that is what is called as a CUEC. User entities are organizations that utilize the services of service organization, and complementary user controls are those that reside at the user entity level. I gave you examples. A simple example could be securing the username and password. Correct? A SOC report for any service organization must be read along with the CUECs. This is where I told you, just because you've got a SOC, then don't say, oh, I'm a SOC complaint, my vendor is SOC complaint, I'm happy. No, go beyond it. Now, many of them ask me as professionals, what is your responsibility? This is exactly what your responsibility is. Gone are the days where you said, okay, SOC report, I saw everything, complaint and closed it. Now read CUECs. See the impact of CUECs. And unfortunately, these CUECs are written in such a way, they will not write the objective statement. They'll give you a reference, refer this point, refer that point, refer this thing. So you have a good amount of exercise as a user of the reports. Okay. So see, if CUECs do not operate effectively, control failure could still occur. And who is responsible? Not the service organization, the user entity. Dropbox will not be responsible. Rather, your company will be responsible. A classical example is physical access. Checks in place prior to loading data. Access control, classical example. Now they have given 25 access. I'll take a very simple example. In AWS, you have a concept called root access. Now that root access obviously is expected to be restricted. You give the root access to anybody, that fellow will destroy the entire thing over. Correct? So if you're a SaaS-based company, how do you control a root access? Is a control which you have to define within you. Correct? So that is where complementary user entities comes in. Now somebody was asking a concept of bridge letter or gap letter. Many times what happens, I'll give you the context, then we'll go into the theory. Many times what happens, I may have done a SOC 2 audit as of September 30th. But the financial statements or the user entities auditors may want a SOC report as of December 30th, December 31st. For 3 months, nobody is going to invest in a SOC. Normally, there is not a scenario. In that case, what happens? The management of the service organization, remember my wordings, service organization will issue a letter called as a bridge letter stating between the date of the SOC report and the date requested by you, in my example, December, 3 months, there has not been any major changes, or even if there is some major changes, you will write a statement. Please note, this is not issued by the service auditor. This is nothing but like a undertaking or a letter or a statement given on a bona fide intention on trust factor. You actually take it. And typically you will have the SOC report end date, what are the material changes, a statement if any material changes, aware, not aware, all the declaration, a reminder that you still have to follow complementary user controls, and the request for user organization to read the SOC report. Okay. One of my favorite questions, which I keep getting everywhere. I am a ISO 27001 compliant. Let us admit ISO 27001 is an industry grade acceptable, very good information security standard. So I am already 27001 compliant and therefore I need not follow SOC 2, or I am already SOC 2 ready. No, I have my reservations on it. Why? See, 27001 focus on those 114 controls. Fantastic. But not each of these 114 controls are there in SOC 2, or rather, I'll put it the other way around. Not every control or the point of reference in SOC 2 is controlled in ISO 27001. There's definitely bound to be additional things. If you are a 27001 compliant, it becomes easier for you to get SOC 2. I'm not denying it. But still, you will have an exercise to bridge the gap. So what is a SOC 2? A set of audit reports to evidence the conformity to a defined criteria such as the TSC. Whereas a 27001 establishes requirements of information security management system. Geographically, SOC 2 is normally accepted in US. Recently, in the last 6 months, I got a lot of inquiries where it is started to accept even at Europe. European-based customers also have requested for SOC 2. So that's a very interesting. Whereas ISO 27001, generally international, predominantly European, but I think over a point in time it became international. Again, industry, it can apply to any service organization, whereas typically a 27001 is based upon nature, size, and dot. But of course, that is something in anyone's case. Compliance to SOC 2 can be signed only by a CTA. ISO 27001 certificate issued by a certification authority. We have the various authorities like BSI, TUV, NQA, a lot of places. And what is this for? Obviously, to prove a level of security level systems, dot. A 27001 is to define, implement, operate. Typically, an ISMS, I think you have, what is it? Plan, do, check, act, and all those things. Now, what are the differences? This is something which may excite you and help you out. And there are open source resources available where you can search it. Even on the ASCPA website, you get some interesting things. So from a trust service criteria to a 27001, typically a SOC 2 to 27001, there are 15 27001 requirements and 19 annex requirements. So all put together 34 requirements out of the 61 is already mapped with 27001. Roughly 55.2, whatever, 56% you are already compliant. The delta of 44% you may have to work on. But look from a point of focus, 160 controls compliant, 302. That means, so if I say 27,000 you have done, it is good. So halfway through you have covered. Is it mandatory to do only 27,001 and then go to trust service criteria? No, it's independent. It's independent. If you are already compliant, it becomes easier for you. But please bear in mind the operative effectiveness principle. Because if you go for a type 2 audit, it should be for a period of 6 months. So 27,001 could be a good starter. SOC 2 type 2 requires testing of operating effectiveness for a minimum period of 6 months. And test results also should be reported, which is normally not done in a 27,001. You just give a certification. And let me remind you, this trust service criteria is also mapped to the NIS CSF framework, cybersecurity framework. It is mapped to COBIT 5, not the 2019. 5 to 2019, there is a mapping, so it takes care. NIST 853, which focuses on security and privacy. It is mapped to GDPR. It is mapped to high trust. and it is also mapped to CCM. So TSC is normally mapped to whatever you notice, the first five points, it's already mapped. The last two points is reverse mapping. High trust is mapped to TSC. CCM is mapped to TSC. What is TSC? Trust Service Criteria. So this I'm explaining because some of your organizations are very mature in controls. You may probably want to look into. A few FAQs. Anybody can sign a SOC report. I already clarified. Only CPA with a valid license of practice can sign it. Need to check with the respective state board under which he is enrolled whether he is permitted to sign outside of the USA. It's very critical. Can I get a SOC 2 only for a product instead of a company? Possible. Your scope, your description, all of them you have to accordingly do it. Can an Indian CA, Indian Chartered Accountant, instead of a US CPA, can he sign a SOC report? I have done it myself in person, but it is not called as a SOC report. It is signed under the requirements of SSAE 3402 under the Indian Auditing Guidelines and Standards. Please bear in mind, it only covers SOC 1, it does not cover SOC 2. It covers only SOC 1, it does not cover SOC 2. There is no equivalent for a SOC 2 in the Indian requirement. Okay. Can a CISA sign a SOC report? Very many cases. In fact, I've seen some reports where a CISA has signed it and the company has accepted. This is unfortunate because of ignorance, etc. So I would say no clearly, but he has a whole lot of potential in gap assessment implementation, and we spoke about all these things. Getting everything to sign, and let me also remind you, a CPA cannot implement and sign. Conflict of interest. So CPA will never implement and sign. CPA will sign the report. Of course, he will perform all his audit procedures, but you require a person to implement. That is where your board can come. Okay, at this point in time, let me see. I am jumping into the COSO framework. Is it okay if I take the questions towards the end, Ganesh, because I'm almost coming up to the end of it?
I think
and I'm open for answering the Q&A even if it is a little more than 7:30. So I think it's okay.
Yeah, sure. So I think we have another 16 more minutes. So I think let's cover the topic and then we can take a kind of a fireside chat of questions towards.
Sure. Yeah. Perfect. The other thing I'm very glad is, almost we had 340, 345 plus participants continuously sticking on to the screens. I'm really happy that, you're enjoying the session, and I hope you are actually sticking on to the screen and not watching a movie on the other end. But anyway, jokes apart, just to quickly move on. Now, this COSO framework is very critical. Why? This COSO framework is the basis on which the trust service criteria and the points of reference have been defined. Now, what is the COSO framework? Basically, COSO stands for Committee of Sponsoring Organizations of the Tradeway Commission. Now, 5 of these organizations came forward: American Accounting Institute, AICPA, Financial Executives International, IIA, and Institute of Management Accountants. They came up with a wonderful document, a guidance. This guidance, if you ask me, overrides very largely any framework. Why? COSO is a guidance on internal controls, not just IT controls. Look at Carve Out. Carve Out is focusing only on governance of IT and management. 27,000 focus only on information security management. That means you're looking into portions. ITIL focus on service management, whereas COSO is an entire large frame. If I look into the scope of COSO, is extremely extensive. Okay, and if you want to, probably we can do a separate session on COSO. That's another area, day's discussion. But yes, what exactly is a COSO? A COSO board develops guidance on how organizations can do risk assessment, how they can do internal control, fraud prevention, and a bunch of these things. So the vision is to be recognized as a thought leader in terms of organization governance and internal controls. And they came up with a framework originally in 1992. 2013, they updated it. 2017, they came up with one more guidance that is not internal controls, that is ERM guidance. Again, ERM is another day's discussion. As of now, we are going to restrict it only to this. And the COSO framework came up with this very interesting this thing called as the COSO cube, 3-dimensional COSO cube, 3 perspective. On top, what you see as column headers, operation, report, and compliance. Then what you see as 5 components, they are represented by rows. And what you see in each of these columns are organization structure by dimension. Okay, so to quickly have a perspective of this, here the focus is, operations are day-to-day. It could be assets, fraud, whatever you are looking into day-to-day. And then a COSO can also be looked from a reporting angle: internal, financial reporting, external reporting. And this is where COSO is being used with respect to SOC. And then you have compliance. It could be for your law adhering to data privacy, GDPR, whatever, you can go ahead and define. And then you have the 5 components which are very critical. First component is control environment. In fact, if you look into a SOC report, you'll find each of these 5 components. I can probably show it to you towards the end. I'll address that. So set of standards, processes that are carrying out. Control environment is the overall structure, your policy, your ethics, your organization structure, your, we call it as PPF, no? Policy framework, procedure framework. Risk assessment is how you do the risk assessment exercise, quite similar to an ISO 27001, but of course, you can expand the scope how you want to define. The third is for the identified risk, how do you keep controls? That is where the third principle, how do you achieve your internal control objectives, etc. And this is where the focus, what an auditor does. The fourth is a very important principle or pillar, information and communication. How do you communicate it? It is not sufficient if you have only all of these controls, you have to also communicate it. And last is monitoring. This is where internal external audit can come into. Okay, I hope that gives you a good perspective. And let me also tell you, these COSO components have further 17 principles, and these 17 principles are what expanded into point of reference. So for each of these 17 principles, what you notice, I think I've not numbered it, but each of these 17 principles is just an FII. You can go Google search, you will get all of this. For each of these 17 principles, you will find the point of reference. In fact, I'll show you that Excel spreadsheet, you will get a complete picture. I think you're getting a fair bit of idea into various things. When I speak about the last portion, you will get a complete picture. So I think we spoke of a control environment. Let's quickly look into examples. Board of directors and senior leadership regularly meet and discuss the internal controls. That means there is an element of control. The organization has a code of conduct. That means what? There is an element of control. Competent individuals are hired. Background checks are performed. Performance evaluation is done. All these indicates that you have a control environment. What is your risk assessment? What do? You have a risk register, which is maintained, updated. You have a risk management policy. You have an ERM policy. Management actively take part in risk assessment. Vendor fraud risks are performed. You take your vendor SOC report and evaluate. All these things indicate risk assessment. What is control activities? You have policies, procedures, organization structure. You have issues, incidents, they are tracked. Any changes to infrastructure application, you have a tracking system. You're taking backups. All these are indicating that you have an element of control. Information communication, you are communicating on a regular basis, you do quizzes, you do security awareness, you send out mails, correct? You have MSAs, you have non-disclosure agreements, correct? Whatever confidential things. So all of them may come under that. And last could be monitoring. You're monitoring, you're doing a SOC 2 examination, you're doing an ISO 27001, you actually going forward and saying, hey, can you come forward and do an internal audit exercise? All of those comes under monitoring. Okay, so answering the 4 sections, I think I've given a fair bit of it. And the last section is how do I get started? What is the first approach? So first and foremost, when you get started with a SOC, understand your audit objective. Is it because my user entity asked, therefore I'm doing it? Is it because I want to better market my product and service? I want it. Is it because my end customer wants it, or for some marketing reason, or for me entering the US market? The objectives could be very different first. Once you have done, identify the scope. Do you require a SOC 1 or a SOC 2 or a SOC 3? A 1 or 2 is what mostly is discussed. Type 3, let's ignore it for the time. Now, not only should you decide a 1 or 2, you should also decide whether it's a type 1 or a type 2. And I told you what is the difference between both of them. Normally, companies first go for a type 1 report. Then after a period of maturity, they go for a type 2. Address regulatory compliance concerns. Who will address regulatory compliance? The company. They have to understand what is the local requirement. Now, if you are based out of US, you have to follow HIPAA for health insurance. If you are based out of Europe, privacy, GDPR. Correct? If you are based out of India, certain legal requirements, enforcements. Correct? Now, for example, you have something called POSH, Prevention of Sexual Harassment Regulations. You need to adhere to it. Correct? In fact, to this extent, you will find a mapping between the ISO 27001 also, where you have to be compliant with the legal. Correct? Next, you start drafting policies. Many companies already have policies, procedures. You need to modify to a limited extent what is necessary. Form a gap assessment, very important. Now, all these roles can be played by any of you professionals sitting here. The last exercise where the CPA does audit, obviously it has to be restricted. Correct? So this is typically over appointed. So it's a consulting plus a audit engagement. Now, what are the contents of SOC? This is very interesting. Okay. So section 1 is normally a management's description, we call it as a management's assertion. Management's assertion. What are they asserting about the infrastructure? Section 2 is a service auditor report. Now, 1 and 2 can be interchanged. I can have 1 as independent service audit report and 2 as management. There is no hard-coded rule. Section 3 is the most important, description of the infrastructure. Very crucial, how to do it, what to do, etc. Section 4, what are the applicable trust service criteria, the common control criteria, the related controls, how are you testing it, what is the test results. This entire section 4 comes from the auditor. This is only if you're doing a type 2 report. If you're doing a type 1 report, this may probably get merged with section 3. And section 5 is any other information provided by a service organization which is of relevance. So Microsoft may want to provide some more information. Amazon may want to provide some more information. That may probably come. And the next is the description criteria. In fact, there is a DC 200 guidelines, which is very exhaustive. It runs into a few pages. Okay, you can go pick it up and download, but the gist of it is what I've tried to give in here. In the description criteria, you'll explain what is the overview, what is the background, what are the types of services provided. For example, if you're talking about Dropbox, what is Dropbox? What is the type of services? What are the services they provide? Then what are the principal commitments and system requirements which Dropbox gives? This is what is very critical. You know, what are they assuring? They give you 99.9%. This is what we assure. So all their commitments. Then comes components of the systems, which are 5. Infrastructure, all your hardware environment, you will speak about it. Infra at a high level, network, etc. You will also have network diagrams, etc. So that much level of detail. Then you have software, which are all the softwares you use. What is the relevance? Okay, I'm using one very, very petty software. It may not be relevant. So you, based on material. How are you managing your people? Your entire process of people, starting from onboarding, background verification, all of this you need to define it. Then the data. How are you dealing with data? What is the data you're getting? What are you processing with the data? What is the output? And then is your procedures. So these 5 things are very critical. Once you're done, you are defining the boundaries of the system. Up to what you do, beyond this is done by the sub-service organization. Beyond this, it is done by the user organization. You have to clearly define the boundary. What is your role? Then you speak about relevant aspects of internal control. How are you complying with the 5 internal control components? What are the 5 internal components we looked into? Control environment, risk assessment, control activities, information and communication, and monitoring. So all these 5 will have to be. Then you will also write what are the applicable trust service criteria, whether all the 5 are selected. Okay, and then you have complementary user entity controls, complementary sub-service organization controls, and any activities performed by the service. So this is the typical description which goes into the detail. Okay, and this is prepared as per the AICPA guidelines. And this is where the judgment of the auditor and the management comes into picture, because at the end of the day, you express an opinion on the fairness of the management description. Very important. Okay, it includes the design implementation of these controls. The last part, roles and opportunities. What are the typical roles which are potential? What are the opportunities? For a SOC 2 client, you know, if you want to go for a SOC, you can do a gap assessment, setting up process, risk register, mapping SOC, you know, a whole lot of opportunities there. On the other end, you can also do the control testing. You know, you can do as per the AICPA framework. You can implement SOC 2 controls. You can audit those controls. Of course, you have to be on CPA for auditing it, but that's all of you can do. In general, you can understand these SOC reports and see how it may, as a user organization, impact you. You can perform third-party risk assessments. In fact, many cases, third-party risk assessments, we pick up SOC reports, go into the depth of it, and we see whether they're compliant, not compliant, etc. And let me remind you, third-party risk assessments in India is starting. It's happening. In US, it is a huge market. In India, it is slowly coming up as a market. These larger players, like let's say, even you take an example of Infosys, Wipro, Amazon. Now, when they are onboarding any vendors, they want to double check whether the vendors are having critical controls. Because of a very simple reason, what we are seeing issues happening. I gave an example of Air India. They lost out so much of things thanks to, unfortunately, a vendor's mistake. And how do I understand my vendor's risk? So there's a huge potential in this particular place for us to get into it. So what is a typical approach which any person follows and what we follow at Grow? Now we perform a typical gap assessment, evaluate the services, products, identify what are the trust service criteria, map the trust service criteria, and identify what are the gaps. So that's a typical approach. And when we go into engagement planning, we go to the depth of it, understand the business, definition of IT universe, perform risk assessment, formalize audit plan. And this is more or less a typical structure what you follow in any sort of an IT audit or ITGC assessment, but maybe a little more from a SOC compliance we'll be looking at. And what are the areas we look into it? Understanding the IT controls, governance, general application, prevention, detection, information security. Look into the importance of IT controls, roles and responsibilities. Based upon risk, what are the things which are there? Monitoring, how do you monitor that? What is the control framework and how do you assess it? So there's a high level structure on how that. So many of them keep asking me, sir, how long does it take for this? So I said, I'll put in a timeline also. Okay, the typical initial discussions that happens for 5 to 10 days. Then there's an evidence gathering, 15 to 20 days. Then the typical gap assessment performs. This is on an idealistic situation, but it may probably scale up a little longer also depending on the size of the organization. The management remediation of gaps identified, it is a very, very subjective exercise. And once it is done, a SOC 2 audit, it normally probably be about 30 days. It may go even for 60 days, depending on the size and intensity. And then obviously is the SOC 2 type 2 report. So that's the typical structure. So my dear friends, quick summary, SOC is system and organization controls. Don't think it is always service organization controls. We saw there were multiple types of SOC 1, which is based on internal controls over financial reporting, SOC 2 based on trust service criteria, and SOC 3 is typically a publicly available report. You have, it is growing in importance, growing in need, and I'm seeing many number of people coming for it. SaaS-based companies, fintech companies have a huge requirement because only based on that, you can trust. The trust service criteria, we have these 5 things: security, confidentiality, processing integrity, availability, and privacy. We need to carefully assess the sub-service organization and user entity controls. I already spoke about it. And this can be a huge potential for us to review third-party risk assessments. Okay. So before I go to the concluding slide, as I promised, because I still have a couple of more minutes, I'll quickly take you through a SOC report, GitHub. And let me remind you, this is publicly available, and that is the only reason I'm showing it. Anybody can download it without any requirements. Okay. So this is an audit firm called Cadence who's given this report. So section 1 is the report of independent auditors. I hope you're able to see my screen. Yeah, section 1, and this is where he speaks about a typical audit report. It's a more or less format is standardized. Then comes your section 2, which is assertion statement. And here he talks about GitHub's enterprise cloud. This is the period for which he's given the assertion, and he speaks about various things. And then if I come down further, this is where is a very important section 3. Of course, in a SOC 3 you can customize it and fine tune it, where they speak about the various things which I told: company overview, system description, organization, what they do, what typically GitHub does. And then you speak about system boundaries. Are they using sub-service organization? Here you can notice this. GitHub uses SAP-QTS, Quartzsite, Equinix for providing data center, and it uses also AWS for doing the infrastructure hosting. So you can understand this is quite similar to that of a Dropbox. And then they have defined what is the infrastructure, what is the data center, what is the software they use, what is the people, procedure, correct? And towards the end, what is the internal control framework? I told you, control environment, risk assessment. Then you have your control activities, information and communication, monitoring exercise, correct? And then comes the principal service requirements, which they've given in various terms of use or terms of service, and complementary user entity controls. Look at this, complementary. That means if you're using GitHub, your organization should have these controls. Look at this, very important, very important. Okay. See, for example, customers should ensure two-factor authentication is in place. They have to ensure SAML is in place. To ensure that how they manage the organization. So a bunch of these. Okay. And attachment D, this could be complementary sub-service organization controls. That means what all they are dependent on AWS or other players. Okay. So this is also very critical. Is there a sample report? Yes. You have an illustrative SOC 2 report which you can download from the internet. This could be a good handy exercise. And one last minute I will take you to show how the trust service criteria looks at. So let me just give you a quick thing. So what you notice over here, I'll just zoom it here. Whatever you notice as the criteria, these are all the COSO principles 1, 2, 3, 4, 5. And for each of this, let me remind you, you have what is called as a point of focus. Okay, the point of focus is, for example, if I pick up the first thing, The entity demonstrates commitment to integrity and ethical values. Remember, I told you 17 things as part of the COSO framework. First principle. Now, what is the expectation? How do you set the tone at the top? Do you have a code of conduct? Do you have, or how are you adhering to this code of conduct? How are you addressing issues in a timely manner? How are contractors and vendors demonstrating commitment? Very simple. Now, for each of these 5 points, you define controls. Then go back and back and forth, and that is where you sort of map it. And you can imagine how big this is, because overall, I told you 302 controls are typically there. Okay, and so I hope that was useful for you. I hope I was able to give you a lot of value addition and a lot of inputs. I know there are a good number of chat questions. I'll be happy to take Q&A, and I'm very happy that most of the audience have stuck on until the end, and I hope I served the purpose. Let's be in touch. I'll be happy to answer your queries. Of course, not everything, because normally about 40-50 questions come in, but we will try as much as possible. Otherwise, you have my email ID and credentials, or my basic information. Feel free to quickly drop in a mail. I'll be happy to connect.
Yeah,
over to you.
Thanks, Narasimhan. I think I've a little bit categorized the question, so we may not be able to answer all the 50 plus questions. We have already answered now 25 questions. So yeah, let me quickly take it up. So this is about qualified and unqualified opinion. There are a lot of questions around it. So can you quickly throw some small light on the qualified and unqualified opinion?
Very simple. If you have reservations in your audit report where we are saying these are the things which are not compliant, we call it as a qualified report. If there are no reservations, it's called as an unqualified report. As simple as that.
So there is a complementary question from Svetrina Das. If we have a qualified opinion on any of the SOC reports, how do we perform a gap analysis? Should we review our controls, or shall we go ahead and ask
very good question
to provide us samples to do the gap analysis?
Two very important things which you can do. First thing is, if you are the if you are the service organization, immediately try to follow up, give a justification to the auditors and explain what is the issue, why it happened. If you are the user entity, you need to periodically follow up with that particular vendor, and you may want to take additional samples for you to get a comfort, or rather you may probably ask him to go ahead and say, hey, you know what, please visit, please give me this additional information. I would want to periodically assess that. So it's a question of time, but you have that flexibility.
Okay. So that really helps out actually. So I think, can you throw some reference websites or something where people can download this trust service principles and other?
Yeah, trust service principles, all of this, what I spoke of, including the mapping with ISO 27001, etc., is all available in AICPA website, aicpa.org. Please visit that and type SOC 2 mapping, you will get it. Okay.
The next question is from Binraj. In practical world, who will audit the compliance of CUCs, complementary user entity controls? Which are, of course,
that's a very good control. That is the responsibility of the GRC team of the user organization. Okay. Or if I am the auditor of the user organization, I have to verify how effective the CUECs are, and basis that I have to take an opinion or I have to compute.
Okay. So can you, there's a question from Akshata Nayak. Can you give any more one example of Carve Out Method, what you discussed, right? Carve Out Method.
See, Carve Out Method in simple, this thing is, I will mention in my report, for example, I'm assuming I'm doing an audit of Dropbox, how I wish I would love to. Yeah, so let's say I'm doing an audit of Dropbox. I will clearly mention that Dropbox, okay, relies upon AWS and other service provider for the following services, or as detailed in my section called as complementary sub-service organization controls. Rest all is my responsibility. For this, I will go back and refer to this.
Okay, thanks. So I think just a small announcement. We have the Menti code live on the screen. So we would request everyone to provide your feedback on the session in the Menti code. You can either put the Menti code or you can scan the QR code to provide your feedback. Narasimhan, I think the next question is from Ashita. Is there any clause on the usage of bridge letter? Like we should say that we can rely on a bridge letter for a period of time, like 3 months or not more?
Nothing specifically. Normally 3 months is an acceptable period. 6 months is okay. Beyond that, you normally have, as a user entity, you would insist. 3 months is what normally happens, because some of these companies have September as the year close, whereas the user auditor may have a December as a year close.
Okay. And the next question is from Rajiv Vaklari. He's asking how different are SSCA 18 equivalent reports in other parts of the world, like for Canada, European Union, and Australia. So how different?
US and Canada have a good potential to accept, because generally US and Canada, to at least the frameworks at a high level, they synchronize quite well. As regards Europe, predominantly this was, predominantly Europe looked into multiple things like privacy shield, whether you are compliant with GDPR and things like that. But now SOC is also getting acceptance, because SOC has a specific criteria on privacy and they're looking into that privacy in depth. In addition, frameworks such as 27001, 27017 are also gaining good amount of acceptance.
Okay. So there is another question, and even I, from a member, and even I have this question. So we get this SOC 2 reports being sent to us to kind of do a validation from the management side. And we have the CPA being signed in it, but we don't get more insights about the team who really did the audit internally, their competencies and how they kind of did it. Is there any kind of a quality check done generally from AICPA or someone to ensure that the right people did the SOC 2 audit and we can place reliance on top of it?
So generally what happens in most of the AICPA engagements, there is a concept of a peer review. It is of course not mandatory on every scenario, but AICPA can pick up certain set of auditors and ask them to demonstrate as an organization. And the other thing which you will have to look into is see how well the CPA firm or the association or the entity is based. Okay. Now, I have seen a good number of cases where people have a CPA license. They do not have technical knowledge or expertise. They go ahead and sign it. You know, maybe whatever. They may have a technical expert who's helping them out. Fantastic. As long as you're able to document it and show it, because audit is all about expressing an opinion and you having the work papers. If you have them, great.
So again, there are a lot of questions around the trust service principles, right? TSP. So most of the questions are around like we have security, we have confidentiality. So this confidentiality, generally when we learn information security, people always say that confidentiality, integrity, availability is everything is part of security. So how different is this in this context of trust service principle? This I think we have got 4 questions together.
I would say 75 to 80% is same. Okay, confidentiality, they will just ask for additional principles. So the way InfoSec security works, and here there works as a small delta, because here everything is gone based on a rule book. The rule book clearly says trust service criteria, security is one principle. And under security, they call this. In fact, they don't use the word security, they just say common criteria. And common criteria is mandatory applicable for security. So if you look into the trust service criteria, it is an implied way of understanding. Point number 1. Point number 2, they have 1 or 2 additional things which is mentioned clearly in the trust service criteria. From an availability or from a confidentiality perspective, you need to demonstrate. And I've noticed many cases, common controls have been defined. Please bear in mind, just because there are 320 or 301 trust service point of reference, it doesn't mean that you'll have 301 controls. Multiple controls can be combined. You know, there may be a control which is applicable even for security as well as confidentiality. So that is quite possible. It is just that I am reading it from that perspective. So from a perspective of confidentiality, these are my controls. From a perspective of availability, these are my controls. It also depends on who the user is. For example, the user of the SOC report is a guy who wants to ensure Amazon is working 24/7. I will focus only on availability. Then I will focus on security. Correct? So that way it is being structured. And that is the reason why you have the specific categorization. You will find interplay also there. Maybe 1 or 2 controls may be additional.
Okay. And there's another question around the competency, right? Like, for example, if a person wants to participate or be an auditor in the SOC audits, like, of course, competencies like the CISA certification from ISACA. So what are the kind of skills and competencies you require to participate in these kind of SOC audit engagement, either as an auditee or an auditor, right? Both ways.
Very good question. See, first and foremost, if you are an auditor who's signing, obviously you need to be a CPA first. Second is you need to have a very good understanding of the technical and system controls. So the expectation is that in addition to having your domain knowledge, you understand the trust service criteria or these AICPA framework very clearly. What is the difference between SOC 1, SOC 2? What is the difference between type 1, type 2? All this framework clearly you need to understand. Point number 1. Point number two, you need to have the technical expertise. That is where a CISA sort of a qualification or these things can help. But just because you're a CISA, you need not be that you have the depth of knowledge, correct? So you can always go into a little more detail. You can always see how well it works and then go into some more, technical expert. Now, for example, you are a CPA, you may be a CISA, but the component of vulnerability and penetration testing, you may rely upon somebody else. So there is definitely some amount of reliance upon others, but in general, this is possible.
Okay, so I'll take last two questions, okay, because in the interest of time, we already ran by another 12 minutes. So is SOC 2 Type 2 report has been approved or accepted by a DPA under GDPR?
Oh, very good question. As of now, it is not considered as a, see, first and foremost, there is nothing called a defined list which is accepted under GDPR. Okay, if you are doing this, I am compliant with this. No. Mm-hmm. But these things could indicate or demonstrate compliance. What are those 2 or 3 things? ISO 27001 for technical and organization controls definitely give a good compliance. 27017 from a data privacy standpoint. And the third thing could be a SOC 2 Type 2 privacy included with detailed coverage, then may be accepted. These are 3 things which are getting good amount of acceptance. Mm-hmm. But I will not say it's a uniform rule.
Okay, so let me just take up the last question, right? So you had a slide around SOC on cybersecurity, which is a new thing coming up, right? So a question from Atul Anand says that if I am providing cybersecurity services, which report my client could ask? Either he'll ask for a SOC 2 Type 2 or a SOC cybersecurity kind of a report. What to expect?
Okay, good question. Good question. The answer could be one or both. Typically, if you are a service provider on the cybersecurity framework, predominantly they will ask you first is a SOC 2 Type 2 report. He may also insist you to cover the additional requirements of the cybersecurity framework. So it depends on the user thing, or you as a user entity can come forward and say, I am also SOC 2, I'm also a cybersecurity sort of equivalent compliant. It is your choice. But please bear in mind, as a service organization, only it is SOC 2. As an independent organization, anybody can go for a SOC for cybersecurity.
Okay. I think, so we have almost answered 50 questions, Narasimhan. I think it's still a big list, but definitely I would like to thank you on behalf of ISACA Bangalore Chapter Executive Committee. And really, I think we had a great participation from our members and other people. We had very interesting people. Still, I am able to see 265 people plus on the session. So thank you so much for your time, and we really appreciate it. And thank you to all the Bangalore chapter members. Please stay safe and stay tuned. We'll have a lot of sessions in the upcoming months. And regarding CPEs, I've already made an announcement in the beginning of the session. And for the last session, I think we are still working on it. So you would receive the CPE credits. And if you have challenges, please always write to chapter@isakabangalore.org. We are always there to help. And thank you, Mr. Narasimhan. And thank you all the members. And I would wish everyone stay safe and hope to meet you soon in the upcoming next session. Thank you all.
Thank you so much, everybody. Take care. God bless all of us. And we hope all of us will get together and meet over a cup of coffee sometime very soon. Take care.
Sure. Thank you. Thank you all. Bye-bye. Have a great day.